So with Mullen, you're going to be hearing a lot about the MOAS and a lot about these crazy price targets in the future. After it runs up its next leg, they're going to get a lot of new investors, and there's going to be a lot of people trying to control the narrative about what's going to happen, and all they're going to tell you is buy, 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 buy. It's going to go to the moon. It's going to MOAS and all this other stuff. And they're going to talk about squeezing the shorts and all this crap. I'm going to show you what the MOAS is, how it works, where certain stocks are in correlation to the MOAS, and I'm going to show you basically the whole idea is that Mullen is going to go up. They're going to try to control the narrative and tell you what to do and basically turn you into a bag holder. I'm trying to help you make money right now, and then I'm going to be trading the volatility, and I'll be doing a post every day, when I buy, when I sell, when I buy calls, when I buy puts. And I hope everybody makes as much money on the volatility as they can. Someday we will MOAS, but it has to be a strong group of people, a coordinated effort, and I'm willing to coordinate this effort. I am not afraid to go to court and fight against people trying to call me a market manipulator. They're the ones manipulating the markets, and it's happened basically every time that we got close to a MOAS, they controlled the narrative and they diluted stocks and they did all types of things. They got these leaders, whether it's trades or whether it's DFV. There's just always somebody saying something that doesn't really help the script. And whether they're dumb or whether they're corrupt, it doesn't really matter to me. They're just not good for anybody. But let's take a look at this real quick.
Being very, very careful with stop losses. Stop losses, in my opinion, are something.
Hang on.
But if Binance US, because of something like this.
All right. So
and note this range is really only 4 pennies.
He's going to teach you how a stock price moves right here. So just pay attention for about a minute.
Here in either direction. But it's the same thing. And the more liquidity there is and the more stable things become, the less of this volatility you get, the less likelihood of a crazy flash crash you get. So why did we get this kind of flash crash over here at Binance? Well, it's probably because of something like this. We'll go back to this little chart right here. Rather than a simple example like what I just explained, let's go extreme. Let's say the market price for Bitcoin is $64,000, and all of a sudden a whale comes in here and says, I'm selling $100 million. And over here on the buy side, they only have $5 million of buyers. Well, now what's going to happen is the computers are going to automatically go down what's known as an order book. And they're going to say, okay, we've got somebody who wants to sell at $100 million worth of Bitcoin. Let's sell 5 million of it at 64. Then let's, now we've blown all of our buyers at that price, right? So to get to the next pool of buyers, let's find, oh, look here, we got $5 million worth of buyers who have set limit orders for 60,000. Okay, let's sell 5 million to them. And then you just keep going down the order book, at various different prices, essentially until you've sold the person's entire $100 million position. Now, the only way to prevent the price from flash crashing is if the middle person, in this case Binance US, can come in and say, whoa, 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 this is where we need to come in and prevent the price from flash crashing. We'll post the $100 million, and then we'll just slowly trickle it out to buyers as they come in to make sure our market price is similar our exchange price is similar to what the broad.
So what he just said right there, that's how market makers are controlling the price. Now on the upside, if you buy all the stock of a certain share and then it's worth $1 a share, and then you try to buy another share for $100 and you set a sell limit to $100, it will trade that trade, and every share that was worth $1 will now be worth $100. But here's the thing, if you try to sell that $100 share and nobody's willing to buy it except for at $1, it'll crash all the way back down to $1 in a blink of an eye. And so the way that you do a MOAS is that you buy all the shares of a stock, you buy options on that stock, and then once you've bought all the shares, you try to buy more shares at a much higher price, and it'll send the shares all the way up to that price, and your options will be liquid and will have all the profits that you can take out, and you never have to sell a single share, and you make a fortune off the options, which will actually deplete it will destroy the hedges, the market makers. Basically, they have, let's just say, 5% ownership in every single stock. Well, if you put them in a margin call because your options are paying so much, they'll be forced to sell all their other positions to maintain compliance. And when they hit that 5% of Tesla, they're basically dropping $1 billion on the order book. No one's going to be able to be there to pick it up. So it will crash Tesla 90% because no one's there to buy it. And it will happen to every single stock that they own, which is basically every single stock. And that's how they control the markets. So this is what the MOAS really is. This is how you should think about it. Now, GME AMC got a lot of influencers trying to dilute the conversation, telling you things about synthetics and all this bullcrap. If you look at AMC is the perfect representation that synthetics are fake. Every time that the price was about to move up, that retail came in heavy. They had to dilute shares in order to keep the price down. If they had synthetics and synthetics could dilute the shares or drop the price and all that bullcrap, they would have never diluted their shares for a low dollar when they knew the price was going to go up, and they could have diluted the shares for a lot more money. And the reason they didn't do that is because they needed the synthetics don't exist, so they can't do it with synthetics. They have to use real shares. So let's take a look at a couple things. This is GME stock price. Back before anybody even knew about it. I mean, you're talking about DFV back in here, April 2020. It's at $3, $2.86 a share. Look at the volume, very low volume, and it's still moving up to $6, 100% swings. Back down to 4, and the volume never breaking over 20 million. So very low volume. I mean, in this bracket, it never really broke over 10 million. Once it starts getting to 20 million, 30 million, you hit the $5, $7, $8. 77 million jumped all the way to $12. And so right now, Mullen is hitting hundreds of millions of volume. It had a 500 million share of volume as well. And the point is that the way that, like, it takes a long time to get people to buy into a squeezes back in 2020 because nobody was really knowing what they were looking for. No one really knew what was happening. But now people catch on much, much faster. And so Mullen just happens to be in a spot where back when GME was at 286, its market cap was twice as much as what Mullen is right now. So back on April 6th, when it's 286 a share, that was still twice as expensive as what Mullen is right now. And I'm telling you, Mullen has more buyers coming in on Monday than GME had back in the 2020. Maybe not late 2020, like December-ish. Maybe November-ish when it started running to $10 plus. And then, but basically, even then, it didn't have crazy volume. And it went from $10 to $30, no problem. Then dropped back down to 20, and then it had its January craziness. And so this is what you can expect to come. Mullen is going to be like going from this 286 to the $20 is roughly a 6x. So expect Mullen can do that 6x here in the next couple weeks just because a lot of buyers are coming in. If they dilute early, that's a good thing. That means we'll probably go to more than 6x when it does pop off. And that just means that too many retailers are buying, that they got to come in and proactively stop the price going up. Because if they were smart, they would always want to let the price go up and then dilute their shares for more money. But if they're doing it before they let the price go up, it's an obvious sign that there's too much retail buying pressure and they're trying to stop it from going crazy. Let's see here. I got another couple minutes. I can do something real quick. All right, so let's do GME filings. So if we look at GME filings, the reason GME will never MOAS is because the rich people are all in on it together. A rich person will never let the rest of the rich people go broke through a MOAS. And if you look at the GameStop 10Q, you will see that they got 300 million authorized shares. Right now, if we look at GME outstanding shares, we see that's a bad chart. Let's see. There we go. All right, outstanding share history. There's 152 million out. Oh no, that's back in. So in 2021 December, there were 76 million outstanding shares. So that means they got another 220 million shares that they could dilute if needed. They will dilute all 220 million shares before they let GME ever MOAS and destroy the whole market. Now, here's a funny thing. The two AMC biggest YouTubers is Matt Kors and Trey Trades, and they're making videos on Mullen, and they're tweeting about Mullen and all this other stuff. And if you look at AMC outstanding shares, 513 million outstanding shares. If we look at AMC filings, so this is like the most bullish confirmation that Mullen's going to pop, and why Trey and Matt Kors are pushing it is to get some people in AMC to sell some shares. So if we look at the 10Q on AMC, their Class A common stock for a penny a piece is total shares authorized 524 million. Right now they're at 513 million. That means there's only 11 million shares authorized that they could ever dilute again, and AMC's denied increase in dilution 2 times, but one back in April and another time back in July. And basically what this means is, to me, is that AMC has become a serious threat. There's nowhere else that you can look where the shares authorized is equal to the outstanding shares like this. Every other stock in the entire market has over 100%, sometimes 300%, sometimes 1,000% more shares authorized than outstanding shares. This is the only one where it's like literally 5% of shares authorized left over from the outstanding shares. And so that means AMC got super close to the MOAS. And in my opinion, Mullen is about to take off so that they can get some AMC shares sellers and to buy into Mullen and try to mitigate the risk that AMC has become. And I believe it's going to work. And so I think that if you're smart and you're an AMC diamond hander, you should be getting into Mullen as big as you can and bringing it back to AMC. And I mean, that would be a smart thing to do. But either way, I'm going to be in Mullen. I'm going to be swing trading Mullen. I'm going to be making money off of Mullen. And then if I get a big following, we're going to either go find a stock to go MOAS that is really, really cheap. Or if AMC's the right place still, we'll see what happens after Mullen takes off and what happens to AMC. But if AMC's the right play, like, I'm not necessarily against it. But this is how your mind needs to be thinking, people. The MOAS is a real thing. You just need to be smart about it and understand that everyone else out there is manipulating you, spreading lies. There are no such thing as synthetics. You guys had them on the ropes, and just retail ran short on buying power when it came to AMC. And now that the market cap's so high, it takes a lot of buying pressure to finish the job. And unfortunately, they're not getting what they need. So, yeah, the fact that AMC is like denying dilution and is majority owned by retail is their biggest bullishness, is that they can't really get in a worse spot as long as they don't sell. And I believe Mullen's about to blow up just so that they can try to get AMC people to switch spots. And then there'll be a lot of dilution on Mullen as well. But it's going to have a big pop before that. So make your bets. Mullen's the right place to be right now. Follow me, and you'll always be in the right spot at the right time, because that's what I do, people. I'm always 100% invested into one stock, or I'm not invested into anything. And right now, I'm in Mullen.